Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. This video is going to speak on when you should consider avoiding the London session. Before we get into today's lesson, let's get into our disclaimer. Do your own research. My content is intended to be used for informational purposes only. Please do your own research before making any investment or trade based on the information provided, and consider your own personal circumstances. You can talk to a professional or do your own independent due diligence on verifying any information that you find on my channel. This is a message from myself, Deontay, as I am not a professional. With that being said, let's get into today's lesson. The London session is a high volume session. It is the first session many retail traders are looking to capitalize on trades. However, there are days where the London session is unfruitful for trading. Let's talk about when the London session is not ideal. London is not ideal when we have 3 consecutive down close days. That simply means avoid trading shorts the next London session. The same can be said inversely. If we have 3 consecutive up close days, avoid trading longs the next London session and opt to trade the New York session instead. The reason I say this is when you're in a trending model, in the near future, you're going to intake some type of cycle of retracement. So this is just a filter. If you have 3 consecutive down close days or 3 consecutive up close days, avoid the London session. It may not be ideal. Opt to trade the New York session. You may incur a deep retracement essentially during that following London session after 3 consecutive trending days. When there is a large range day greater than 2 times the 5-day ADR, the average daily range. So if you have a large daily candle, simply, let's say it's 130 pips, and that's larger than the last 5-day ADR times 2, most likely the next London session is not going to be ideal, because after a large range expansion, the market is less likely to do a second or a greater range expansion again. It's most likely going to go back into a cycle of small range. If you are trading a non-farm payroll day or NFP, avoid trading the London session. The reason why is because we know that all markets are waiting for that news release, that hype or that anticipation of those numbers releasing at 8:30 a.m. during the New York Open session. The London session may be in a phase of accumulation or consolidation, and market makers are going to hold London session in a holding pattern. So it's not ideal to trade the London session during NFP. I personally say avoid trading NFP, but if you're going to trade NFP, definitely avoid the London session. When there are multiple medium to high impact news drivers during the London session, meaning there is multiple news drivers that are high to medium impact, so let's say there's like 3 drivers coming out during the London session, you're most likely not going to be ideal. So check your calendar for your news outlook for the week, and if you notice that there is a specific day where there's large amounts of more than one news driver, let's say like 2-3 news drivers during the London session, it's not going to be ideal. Most likely it's going to be a mixed day. Now if there's an absence of news in general from the London session, so there's no news drivers occurring during the London session, avoid trading London session, because we know the news is the excuse for the market makers to manipulate price and to inject volume either to the upside or downside. You be using that news excuse for the markets to move up or down. We're trying to get into the wave of what smart money is doing. So if there's no news, don't trade. Trading a day that is going into a holiday close or a long weekend, meaning let's say it's Thursday, right? And going into Friday, the weekend is going to be a 3-day weekend. So meaning Saturday, Sunday, and Monday, there's some type of bank holiday going on Monday. Opt to trade that Friday going into that long weekend. That London session may be unfruitful for trading. It's not ideal. To go a step further, some characteristics I look for is the Asian session being greater than 40 pips. If the Asian session is greater than 40 pips, I believe the next trading session for London is not going to be ideal. When the New York lunch or the Asian range is not consolidating, I believe the next London session is not going to be ideal as well. I want to see price being held in a tight accumulation or consolidation going into London session. If the Asian session trends in one direction from 8 p.m. all the way up to midnight, so let's say it opens at 8 p.m. and it starts trending bullish, or it opens at 8 p.m. and it starts trending bearish, and it continues that bearish or bullish trend all the way to 12 a.m., I am opting out and thinking that the London session tomorrow is going to be unfruitful for any type of trade setup. I'm going to opt to trade the New York session instead. Let's take a look at some examples of what I'm talking about. So here for this example, we can see that the Asian session here for August 2nd was greater than 40 pips. It was 44.8, so basically essentially 45 pips. We can see that this was ranging from 8 p.m. all the way down to midnight, right? It wasn't in a tight consolidation. We can also look at the New York lunch session from 10 a.m. to 8 p.m. We can see the market was threadily trading up bullishly, right? There's a trend here. From down here, it trended all the way up here. It wasn't more of a sideways price action like that you see here. So this, in my mind, right, grants me the ability to say, let's filter out tomorrow's London session and let's trade the New York open session. Simply as that. And as we can see, we don't get that nice dynamic accumulation, manipulation, and distribution from the London session, right? That protractionary state after midnight or after 2 a.m., we normally like to see a deep pullback below the Asian session low. If this was bullish, granted hindsight here, if this was bullish, we would want to see price drop below midnight opening price, below the Asian session, right? And create the low of the day and then a rally. So here we would have filtered out the London session and would have traded the New York session. Let's look at another day. We can see things are a little different here. We can see that the New York lunch session is consolidating. It's within a certain pip range, right? It's not necessarily trending up or trending down, but it's more of a accumulation or holding pattern, especially towards the end. We can see it's ranging back and forth. The 8 p.m. starts. We see the market doesn't start trending immediately to the upside or downside after the start, and it's trending back and forth in a tight range of consolidation. At the end, it does trend down lower, but for the bulk of the duration or time between 8 p.m. and midnight, we can see that it was consolidating. This makes the London session, the next trading day, ideal, most likely. So that means we're probably going to be looking for an optimal trade entry between 2 a.m. and 5 a.m., right? During this session here. You can see price drops below the Asian session, drops below midnight opening price, right? Creates the low of the day, nice dynamic drop down. And then we get that runaway, and then we get that New York session blast off. Here we have another example. We can see that we're looking at June 29th, 2022, New York lunch session, and June 29th Asian session, and then the next trading day is June 30th. We can see that the Asian session is in a tight consolidation. It does rally after 8 p.m., but does come back down into that range to consolidate towards the very end. It even started tightening up. So if I zoom in, you see the candles are getting smaller. Small ranges eventually lead into what? Large ranges. This is all the market works on, even on all time frames. A small range day eventually is going to bring or lead us in the future to a large expansion on the daily chart. That's just how it goes. Same thing on the lower time frame. The candles start getting smaller, smaller, smaller. Eventually, we're going to see larger candles be printed on the charts. We can see that the pip range as well. So if you measure this from its high to low, we can see we get about 19 pips if I were to round this, right? Not over 40 pips. So it's still a fruitful or ideal London session. Same thing with the New York lunch session. New York lunch session did start to trend up bullishly throughout this session here, but then it started to consolidate and be accumulated as if market makers were manipulating it, holding it sideways, right? Trades up and then starts manipulating itself and trades back into the range a bit. So this is consolidation going into more long extended periods of consolidation. And then finally, we got the injection of volume. We get that drop down below midnight, drops down, drops below the Asian session low, makes the low of the day, and you're hunting your what? Optimal trade entry. Anywhere from 2 a.m. to 5 a.m. it should form. And then you get that blast off, and then it looks like New York session trades a little down and gives us a reversal down into London session trend of the day. But this is how we're filtering certain days we want to see the London session to be fruitful or ideal to trade, or when to not trade the London session when it's unfruitful and not ideal. Here is the day of non-farm payroll. So you have August 4th, and non-farm payroll here occurred at 8:30. We can see the Asian session prior to that day is in a tight range of consolidation. However, if we look at the New York lunch session, we can see that it's in a trending model. So it came from all the way up here and trended all the way down. It is really rangy in pips. Plus, it's not physically being held in a consolidation or accumulation. It's trending in a direction. So we already have ideas that trading the next day's London session, more than not, is going to be unfruitful. We're not going to get that optimal trade entry that we're looking for between 2 a.m. and 5 a.m. Opt out to trade the New York session, and there you go. You get that optimal trade entry. Yes, of course, with hindsight, we can see that it was a bearish optimal trade entry right into a fair value gap, but we can see how certain things or past data can give us insights of when to not trade a specific session, and we're specifically talking about the London session. Some insights of when the London session may be ideal is when the Asian range is anywhere from 25 to 30 pips. The Asian range is in a clear consolidation, as well as the New York lunch session. There's only one news event during the London session, meaning there's one driver or prime cause of excitement during the London session. And the previous day was a small range day. Let's take an example on the left. Here, I want to bring traders to these 3 trading day examples. We're going to start off first with June 15th, 2022, and then we'll go on to the 16th and then the 17th of June. So starting with June 15th, 2022, we can see that it's a small range day. Now, how do we know it's a small range day? So we go from midnight to midnight. We can see from the London session, New York session, and the lunch session does give us a whipsaw taking out buy side and sell side, but then consolidates late PM of New York session, and then Asian session starts and we're still in a consolidation. So you can see that primarily this whole trading day was what? A small range day. So that's the high of the day, and this is just about the low, right? We'll eyeball it. This is a small range day. What do I normally preach after small range days? A large range day is going to be expected in the near future, and we actually got it the next trading day. We can see here, the next trading day, a large range day occurs. This London session is way more dynamic than this London session, as we can see. Now we can see that for this trading day, it was a large range day. So from this high into this low down here, we can see that is a larger pip expansion compared to yesterday's trading range. After a large expansion, what normally occurs? Back into the cycle of a small range. Let's see what happens on the 17th. So 17th is a Friday going into a Sunday right here. So you can see it goes 17th into 19th. So that's Sunday's trading range. We can see that Friday is a small range day. Granted, it is a smaller trading day. It's still a smaller range. Look how less dynamic in range expansion it is. After a large pip day, most likely you're not going to get another large dynamic move. Not saying you're not, and it doesn't happen, because there are times where the market does give a large leg and then it gives another large leg as well. But eventually the market's going to go into a cycle of small range. That is what is occurring here. These trading days right here, these 3 here, can show you the bigger picture or the primary function of these markets. Small range, large range. The main concept of the lesson. Skip the London session and trade the New York session if the criteria tells of an unfruitful session. This will bring structure to intraday trading. Now, many people may see this as, well, now you're limiting me to how often I can trade. Well, that's a good thing, because now you're not greeding into the markets trying to capitalize on every trading day, because we know every trading day isn't a trading day. We know that there's going to be days where we are met with retracements or a quick reversal, or the market is just accumulating and stalling for days on weeks. So understand that there are certain criteria you need to have met in order for you to dive into that trading day. With that being said, I'm going to conclude the lesson. But as always, I'm going to leave you guys off with a quote. Discipline is the bridge between goals and accomplishments. Jim Rohn. Thank you and peace.